Hi everyone. In this session, I am going to present you smart money tactics. This will help you to understand how you can be literate more in financial education. So let's move towards our main agenda of this session. So first of all, I would like to explain you what is smart money, the concept of smart money, and then I will help you to understand how you can master your budget, and then we will more understand the start investing early concept, and then I will help you understand what is how you can educate yourself and stay updated. And then in the end, we will discuss more in detail about the financial tips. So what exactly the learning outcome you will get in this video? First of all, you will be able to understand the comprehension of financial literacy. This will give you the complete understanding, and then money management skills, which is one of the most important skill everyone must try to learn these days. And then I will help you to understand ability to set financial goals, how you can set your financial goal, which is one of the most important uh, challenge we are facing in our daily routine life. And then at the end, we will discussing that how you can apply knowledge to finances, and the knowledge you have, how that will be helping you for managing your finances. Now let's try to understand what is smart money. So before we jump into the tactics, let me define what mean by the smart money. Essentially, smart money is the money that basically being managed wisely. So here is your wisdom is really important. And it's talking about the making strategic financial choices, like whether it's a saving or investing or spending. You need to understand where you are standing. Either you are saving your money, either you are investing your money, or either you are spending. You need to understand your trend for spending, and then think of it as moving from reactive decisions to proactive. So instead, you are just thinking that okay, if the situation will come, I will see later on. But the smart money concept will help you to understand that you need to be a proactive. You already have the emergency fund, you already have your saving. Instead of the time in the difficult time will come, and then you will be asking money for someone else, why not you can manage your money wisely? And informed choices that basically set up you for the long term success. So in the long term, you no need to look for someone else. You have the success in terms of money management. And today's we will break down several actionable tactics that basically help you can start using you for the right way. So in a simple word, if you would like to ask me what is smart money is all about managing your money. And if you learn this art for managing your money, your life will be very easy. So let's more try to understand about what is financial literacy. The financial literacy is basically knowledge and understanding of various financial concepts, tools, practices needed to navigate the financial world and make informed financial choices. So smart money tactics and the financial literacy, they have the correlation between each other. So financial literacy means that you must know what are the tools, what exactly the concepts, and what exactly the best practices for managing the finance. And this is what exactly the people who have this knowledge, they basically remain in a very good and healthy life, in not only in terms of money, but they are enjoy all over the world. They can travel, they can move around, they can spend, and they enjoying their life. And how these things are happening only due to the financial literacy. Now let's talk about the money management. To better understand financial literacy, we can look at five key concepts. First of all, you must try to understand what does these mean by your budgeting. And then you need to understand the concept for the saving. And then you must try to understand investing. And number four, borrowing concept. And number five, planning for your future. Now let's talk about money management. The number first thing you need to concentrate for every single month, whenever you are getting your paycheck, you need to budgeting your whole month activities. Like budgeting involves having a spending plan based on your income and expenses. And to create a budget, you need to consider the following things. First of all, income. Any money you receive, this will comes under the category of your income. Fixed expense, these are the expenses that usually cost that the same each month and are paid on the regular basis. Fixed expenses are basically can be your bills, can be your liability in terms of paying your rents, home rents, etc. So these are your fixed expenses. And then discretionary spending is basically the money spent on non-essentials, the things which you don't need right now, but still for your wishes, to fulfill the wishes of your family, your spouse, your kids, you just spending the money now. And that is basically the red alert will come here now that you need to control. And then the saving, for every month whatever the savings you are basically getting, and in your paycheck, you money you put aside for each month for emergency or later use. And this is one of the most important area, that everyone must save your money for each and every month for your emergency fund. And emergency fund is the one that may this not happen, that if some incident will come into your life and you become ill, or you have some, the heart disease, or any incident comes in any time, so you must have some money in your emergency fund now. And that will basically help you, instead of asking money for someone else, if you already have your emergency fund available in your bank, so you will be remain cool and calm, and in the time of difficulty you no need to be worry about these things. So the rule here I would like to recommend, which most of the financial experts recommending, so 50, 20 and 30 rule. So this is a simple budgeting formula where 50% of your income goes towards the things you need. So this is the essential part, which 50% income you need to spend now on your every month now. Basically, the things you really need, that one. And 20% goes towards your saving as specified already. And 30% goes towards the thing you want. And this is the area that the 30% you can spend the money towards the things you are desired, basically your family is desiring. So if you just follow this concept and the rule for distributing your budget, so you can save your money and budgeting on the monthly basis very easily now. And now you need to understand, you need to differentiate the fixed or variable items for your expenses as well as your wishes. So the expenses are and decided which are your fixed one, stay constant for every month, and which are the variable month, which can be changed for every month. Like which do you want to consider? First of all, let's say phone bill. They can be the fixed amount bill. Your landline bills, your rental payment is the fixed asset, which you have to pay rent, which is the fixed amount. And in the similar way, fast food might be you define that every month you can only spend $10 or $20 or 50, $60 or $100 in a month for fast food. And then when we talk about the grocery and medical expenses and internet bills, they can be the variable item bills as well. So you need to define now. And according to that way, you need to define your budget. And if you will not differentiate between the fixed or variable items, your expenses, you're unable to define your budget now. Now the second tactics for smart money concepts which related towards the saving. So saving means that saving money helps you cover future expenses such as higher price items and emergencies. As I already told you that if in the times of emergencies you must have the saving now, and you will most likely encounter unplanned expenses can happen anytime, or even periods between your job. You might lose your job anytime. We don't have any guarantee. So in that time, how you can survive? You must have the 6 months emergency fund. So at least you can get in your new job, and that can take some time for getting the new job. But in that time, for the 3 to 4 to 5 to 6 months, you must have some saving. And having money saved can help you cover those costs and give you the financial stability and give you more flexibility to explore the other opportunities as well. But just imagine that if you don't have the saving, that will be the nightmare. How you can survive without the saving? And just losing your job or lost your job and employer can terminate you anytime. From who will help you if you don't have any saving now? So saving tip here, automate your saving to ensure money is set aside each month. So every month you are saving something, the 20%, 50, 20 and 30 formula which we have seen in previous slides. Now another important concept for smart money tactics, investing. Investing involves growing your money over time by allocating money to stocks. You are investing on bonds, real estate, or you rent your home and you are getting some fixed amount of money on monthly basis will be the great example of investing. And more, although it involves higher risk than saving, it can also yield high returns. So if you are planning for investing, you need to make sure that while investing on stocks, you must have your thresholds, how much you can invest, because there can be the risk involved. And investing gives you solid foundation for your future and allow you to practice self discipline and time management skills. You can do some other works as well now because you have money in your fund, and money will be multiply every day, every week and every month. And this is the beauty of investing. And find an app. You need to find the apps. Like investing never been easier due to digital technology. Many reputable financial institutions will help you for saving and investing. Applications are available online. You just need to see in your country which one is the reliable resource and then invest while using those applications. Number four, borrowing. So smart money tactics, there are many times will come when you need money than what you have. And for example, if you plan or pursuing higher education, you may need a student loan. And student loan can be help as long as you understand the terms of your loan. So you must be very proactive. If you are getting some loan, you must be understand all their terms and conditions wisely. How much time, what exactly the interest rate you supposed to pay them now. So in the similar way, this is something not a easy thing to ask borrowing concept from the banking sector because they are imposing so many interest rates, and you must know about the different loans available to you and the repayment obligations, how much you have to pay monthly basis and the interest rates. And the main concepts credit here, with credit cards it is best way to only spend what you can make timely payment on, and missing payment can hurt your credit scores, so which is used by the companies to decide if they will offer you a loan. So make sure that if you are also asking a bank for the credit cards, which is I don't want to recommend, but if you are really need for the credit card, make sure you need to use the cards very intelligently, smartly, and no need to spending a lot with your credit cards, which can be the nightmare. And this is another shape of loan which you have to pay now for every month. Number fifth, smart money concept, planning for the future. So retirement might seems far away, you already have in your mind, but it is the best to remain to be proactive. And when it comes for the planning for your future, the earlier you start, the more stable your financial future can be. And one benefit is thinking ahead. Those people who all the times allow to figure out how much you need to save and invest each year to reach your financial goals. In USA, there is a plan which is called 401k plan. If you have a job that offers a retirement or pension plan, contribute it as an additional way to establish a more secure financial future. And in the similar way, either you are living in India, Pakistan, or any other country, we need to have our provident fund account where employer contributing a certain amount and you are also contributing with your salary monthly as well. And this will basically, the primary purpose is for planning for your future. So if you lost your job or any other stuff. So you must have something in your bucket to survive in the difficult time or any risk will come now. So setting the financial goal, you need to make sure that goals create accountability and motivation. And once you assess your current financial situation, you can write the SMART goal, which is very important. What exactly you want to achieve, your ambitions, and make sure that goal can be the specific what exactly you are trying to achieve. And the money tactics, measurable, how will you know when you have achieved your goals? You must know. And the attainable is the goal strictly achievable that you can achieve on the monthly basis, like you have a plan for saving the money of $500 every month or $1,000. So you must be define the specific goal now that can be measured, that can be attainable, and that will be the relevant, and that can also support with your goal. And when will you achieve this goal? So you must define the time specific goal. Just like I am sharing the example that every month I will be saving $500 or $1,000. And this is the way you just need to define your financial goals. And in the last, what exactly the benefits of smart money literacy you can get? You will be more financially empowered. Financial knowledge is helping you, allow you to be in charge of your financial situation. And you can make the informed decisions. And these skills basically create the discipline in spending habits now. And security, you will be responsible for budgeting and saving, can achieve you the confidence to save unexpected financial expenses you can manage now with the help of financial literacy or the smart money literacy. And achievable goal are short term and long term. You can define the great ways to take steps to achieve your financial ambitions. And stress reductions, money can be cause of anxiety and stress. Having financial skills help ease that stress and gives you the confidence in your decisions. Wealth accumulation, saving and investing allow you to have more financial secure future. Loan lead to early retirement, and this is how early retirement you can get now, only with the help of wealth management. So I hope that these tips and tricks will help you to understand smart money tips. In the last, I can explain you that at least 1 year reevaluate your financial plan, and perhaps you are earning money income or your budget. You need to be proactively restricted about the concept. It is good to make changes that fit your financial goals. Number second, small changes can make a big differences over the time. For example, put a little bit more income into the saving each month, or decrease your expenses. Often you go out to eat, and the more you will be you know get rid of your expenses, the more you will be financially sound. And number third, create positive financial mindset. Thinking about financial does not even to be overwhelming. Be aware of your spending habits, take a note of your strengths and where you can improve. These tips and tricks will help you for smart money management. And I hope that if you just follow these tips and tricks, you can make yourself a better version of your life, and you can achieve everything. You can travel all over the world, and you can fulfill your requirements and desire if you just follow these concepts. Thank you very much for watching this session.